Hi everyone, the crypto market simply will not rise in any significant manner until the DXY, the US dollar, rated against a basket of other fiat currencies, goes down after its incredible bust up of, where are we, from the low, 7-8%. That is a huge movement of currency on the weekly chart. And crypto will not go up as well unless the US Treasury yields that are just flying through the roof and making the cost of capital absolutely extraordinary after the Fed's aggressive tightening, until these begin to slow down as well. These yields, again, increase the cost of capital. It makes mortgages higher. It increases the interest payments on all the debt in the United States and also for anyone outside the United States. It also creates tremendous stress on the banking sector and anyone who owns US government treasuries, because if we remember, the yield is inversely correlated to the value of the bond. So the higher that these yields go up, the lower the value of the bond continues to fall, which is absolutely incredible. And the losses are in the trillions of dollars. The data is actually showing us that the US Treasury bonds, the safest collateral in the world right now, is more volatile than Bitcoin over the last 12 to 24 months. It is extraordinary time. So we just have to be very, very patient with this and understand that major markets are throwing risk markets like crypto to an absolute spin. And I'm very, very surprised how well Bitcoin has held up, but it is no surprise that crypto itself has not moved any substantial amount higher. The downside is the surprise, so we just have to keep an eye on that. Now, what needs to happen? So if the dollar begins to fall, which it does look like there are bearish divergences developing on the daily charts and the 4-hour charts, so this does look overheated, this looks overextended. This can continue rallying, but momentum is dropping. If the dollar does sell off, that capital is going to go somewhere. If yields do sell off, I mean, that is showing that capital is going from the dollar into yield, so that's a good start. But for yields, for the yields to stop going higher and for money to flow into bonds, which the market kind of wants right now because it's just unsustainable, the stock market has to move down. It is just how dynamics work. The capital liquidity in stock markets, and this is shown throughout history, when the bond yields go out into crazy town, that capital has to come from somewhere. These yields become very, very attractive to investors, earning a 5-6% on a 1-2-year treasury bond. The money from the stock market then sells off into those bonds and those yields fall down. So that's exactly where we sit. Very, very impressed that Bitcoin's holding up as well as it is, but it doesn't mean it can't have another drop from here, along with gold. So we just have to pay attention to that. Generally, gold and Bitcoin, those type of assets, and also Treasury should rally out of any event that we're coming to where the stock market implodes. So just have to pay attention to that, be aware of the risks. Hope my explanation has been helpful. Bye-bye.